September was supposed to be this month that breaks the market completely into pieces. Instead, it just delivered the best performance we've seen in 15 years, flipping Wall Street's seasonal script and leaving investors both relieved and uneasy because why the heck is this happening the way it's happening? So to wrap everything up, the S&P 500 has closed higher at 0.41% in the green territory. We've seen the Nasdaq add 0.30%, capping the strongest September since 2010. The Dow tacked on 82 points to notch a record close because what we've seen was pharmaceutical stocks gave an extra lift to markets after Trump announced this new direct-to-consumer drug platform through Pfizer, and that led Pfizer to surge more than 6% after confirming it would sell drugs at reduced prices through the program in exchange for tariff exemptions and domestic investment commitments. Eli Lilly and other firms also lined up for similar deals, and that announcement was enough to turn the quiet downbeat session like, oh, we got the shutdown coming at midnight into this really afternoon rally that we've seen right after lunch. So for the month, what we've seen is the S&P 500 gained 3.5%, the Nasdaq gained 5.6%, the Dow up 1.9% for the month of September. The S&P also chalked up its fifth straight monthly gain, so it's looking good. And now historically since 1928, the fourth quarter, which starts tomorrow, has been the strongest for markets. It's the strongest stretch of the year for markets, averaging 4.2% in the green territory. So there is a gain to expect from Q4. And when September itself ends at higher records, the odds improve even more. So CFRA Research's Sam Stovall points out that markets tend to build on momentum when Q3 ends in the green. So while a government shutdown is just minutes away or just hours away from that happening, investors are leaning on the historical playbook. Q4 is usually bullish. This shutdown doesn't really mean much for the markets. Buy the dip if there's a dip to be bought. But beneath the surface, the labor market still looks a bit frozen. We've seen the labor market really continue to show its cracks, and we'll talk about that real quick. So what we've seen is the labor market is still frozen. Job openings held at 7.2 million in August, near a post-pandemic low. Hiring edged down to 3.5%, matching the weakest pace in nearly 15 years. So there's always a record to be had. The quits rate slipped again to 2.1%, which was a stark reversal from the 3.3% highs of a few years ago. And when workers had confidence to leave their jobs, we're not in that case no more. So this stagnation is the clearest sign of cooling labor market. Workers are staying put. They're not really switching jobs. Businesses are holding off on staff, and they're not laying off a ton of people yet in the data, but they're not hiring. They're just holding steady. Then the layoff rates dipped to 1.2%, which is still below pre-pandemic levels. But with the shutdown looming, this might be the last jobs data we see for quite a while, depending on how long it takes the government to get open back up and how that works. But the Labor Department has already said that payrolls, the jobless claims, and these other critical releases will be suspended if funding expires. Now, from the Fed's point of view, we heard from Federal Reserve Vice Chair Jefferson, and what he really underscored was this fragile picture of the labor market. He noted that the unemployment rate is at 4.3% in August, could edge higher by the year end. We'll see on that. Hiring has slowed down to its weakest pace since the recovery from COVID-19. And that's why Jefferson's has supported, at least shown support for this quarter point rate cut this month, despite inflation still being above the Fed's target. His forecast for GDP is growing at about 1.5% for the rest of 2025, slow and steady, but far from overheating. We also got consumer confidence, and that has hit a wall. So the Conference Board's index of consumer confidence dropped to 94.2 in September, the lowest since April, which consumers' view of current conditions also fell sharply, and expectations for the next 6 months remain stuck below the recession threshold. The labor market differential, which was the spread between those saying jobs are plentiful versus hard to get, narrowed for the 9th straight month, and now just is sitting at 7.8. That weakening sentiment really lines up with the hiring slowdown in this labor market cooling. Now, the big question this week isn't about jobs, but government funding, and midnight is a huge deadline to watch. Both Democratic and Republican bills face hurdles in the Senate right now. Prediction markets put the odds, and I will put this on screen real quick, of a government shutdown at nearly 98%. So you can see it right here. This is on polymarket.com. U.S. government shutdown by October 1, ? And right here you can see the chart zooming on up as the government shutdown looks very likely tonight at midnight, starting off Wednesday with no government. What do we do? So here's really what happens if the lights do happen to go out. So essential services such as social security, air traffic control, border patrol, all of that keeps running. Now, it's the non-essential agencies to watch out for, like the SEC, the Securities Exchange Commission, the Labor Department, furlough workers, and halt data releases. So IPO approvals freeze, national parks close, and SNAP benefits could see some delays. The IRS can operate for 5 business days using contingency funds, but only through October 7th. So that's not that long in the grand scheme of things. So this shutdown could also be different because the Trump administration's budget office has floated mass layoffs instead of temporary furloughs, and that would mark a sharper break from what we've seen. Now, markets don't really seem scared of what's going on. History shows stocks often rise during shutdowns. It's usually a nothing burger. It's buy the dip kind of deal. And this isn't from me. This is just what we read on here. So don't go in there saying Joel gave y'all financial advice to buy stocks at these valuations just because the government shutdowns to buy the dip. But on average, the S&P has gained 4.4% during 20 shutdowns since 1976. We see bond volatility pick up, but equities usually shake it off once the political theater ends. So as Bespoke Investment Group puts it, shutdowns are all bark and little bites. Still, this one is pretty sensitive at this moment, and right now investors look to Friday's jobs report, a release that might now be postponed as everybody's interested in the labor markets after the revision numbers dropped, and they were huge. People that didn't even watch economic data are now like starting to put it in their brain like, man, like there's all this data out there we need to be watching. And just as people start getting interested into it, like we're talking about mass amounts of people now interested in the data, it's going to be delayed right when it matters. So, you know, who knows if they've really seen the numbers and need some time to really make up with it and allow this rally to keep on running. That could be me just wearing a tinfoil hat right now. But you never know. We'll just know when we know. But the market just closed at its best September in 15 years. We can't deny that. Labor markets are softening, but not collapsing. So it's not a stoplight for the rally yet. Consumer confidence is fading though, so mark that on your calendars as something to continue watching. U.S. government is just hours away from shutting down. And history says shutdowns rarely derail markets, but mix in sticky inflation, slower hiring, a constant political uncertainty, tariffs. We're not even talking about tariffs in these videos. And the fourth quarter could prove more volatile than the seasonal playbook suggests. Now, remember, Q4 seems to be a pretty strong quarter for stocks. So even in the face of all of those concerns we just talked about, maybe it balances out and it's just a normal month. But, you know, everything's been anything but normal lately. So like I said, all we'll know is when we know, and when we know, we'll know. And I'll talk about it. We can hang out together, learn more. Comment down in the comments below what you think's going on, where you see things going. I'll see y'all tomorrow. This was a fun video to make, and maybe the lights will be out tomorrow.